Okay, what we're going to talk about tonight is I do this once a year, probably should do it twice, but the market from both the national, the state, and the local level is important to look at. So what I'm going to start out with, I'm going to start with a national look at the real estate market, some of the factors that are affecting the market, and then we'll go from there. Tim, should that one be on over there?
What's that?
That projector?
They're both off.
Oh, they're both on. Well, why are they off? Tech support. It was on a second ago. There we go. What do we got to do to make that work?
Well, it was just the machine had decided they want timed out. Went to sleep.
Okay. So what we're going to do is we're going to start at the national level first, and then we're going to go into the state and then local, and we're going to talk about some of the things that are important. I am not going to bore you to tears with graphs, because I've sat where you sat before, and I don't want to be bored to tears. However, there's a couple things I'm going to point out on them. First of all, we're going to look at this as this is homeownership rate for the United States, and this is from 1960 to just last month. As you can see, if you start out here, and I'm going to point a lot, so hopefully that's okay. We were at about 63%, we're at about 63.5%. So we went through this big group, and if you notice the slide on 2005, pay attention to that peak, because you're going to see that peak again in some of the other charts that are going to affect our business. Now let's put some data on here. Sham, how do I get this to work? Let's do it this way. John, where'd you go?
Outside.
Okay. Okay. I'm gonna do it this way every time to be clean. See if I can get this to work a little bit better.
This is what I'm doing Friday. Friday, Saturday, Sunday.
It's okay, I'll just do it by hand if we need to. Okay, so look at the chart here. This is from, I'll give a little bit of credit, this is from Housing Bubble. And the recession officially ends here in 2010, and homeownership is plunged to the lowest generational levels that we've seen, so we're back to where we were in the 60s. That's kind of interesting in the sense that, now I'll just go ahead and do it by hand, Sean, that's okay. Yeah, not a big deal. Yeah, no problem. No, this is just Windows. Yeah, I'll do it by hand. Not a big deal. Okay, so homeownership rates are down all over, and we're going to look at it by age. Now pay attention to this, because when you do marketing for the people you want to rent and the people you want to buy your flips, we're going to get into the age group you want to target, and then we're going to narrow it down to the age group you want to target for dating. So as you can see, it's down across the board, but it's really down for people under 35, and particularly a steep slope for 36 to 44, which primarily is the first-time home buyer market. So if you're in the flipping business, the first-time home buyers, which is what I do, this is, you got to pay attention to this. It's a smaller slice of the pie to look at. So if it trends down like that, and those rates, by the way, continue, I don't see anything coming up on that market set. So one of the things that we have an advantage, one of the advantages we have is that we have another option. We'll talk about that in a little bit. So age of recent home buyers in 2014 by the state. So if you look at Ohio there, you'll notice that our primary buying age is 40 to 45. That's a lot higher than I think a lot of people would think that. You think, oh, first-time home buyer, they're going to be 28, 29, they've got their job, they're out of college, they're ready to go. Nope, not happening. 40 to 45 is actually fairly well along for a primary home buyer. So where are those people at, guys? They're renting.